Good evening. Quick market update video for you guys here. We're just going to start off by taking a look at the indexes. Real quick, just my thoughts on it, what I'm expecting for to play out in the coming days. And then we're just going to wrap it up by looking at 4 different stocks on my watch list that are actionable as early as tomorrow. And there's one in particular that I would really put at the top of my list, but we need the market to support us throughout the potential breakout if we do get it tomorrow. First things first, S&P 500. You can see we had this very strong move to the downside on heavy volume throughout the duration of that move. And now we're kind of just moving higher, but on decreasing volume. This is not what you would want to see from a bull's case. It just looks like a low volume retracement back up to the short-term moving averages, and then likely going to just reverse and move back lower. In terms of volume profile, it's kind of textbook. It's picture perfect in terms of what you would want to see from a retracement back up that you could short into. With that said, I wouldn't be surprised, if you're a bull, that you probably don't have a whole lot of conviction after seeing the most recent move. So what could give buyers a little more confidence would be for the most recent low to be tested. And if that low holds, you're going to have more conservative investors, traders, more willing to get involved, and that's where you see the volume start to come in as we attempt to break to the upside. So, generally speaking, once you have a strong move down, you become a short-term extend the way we were. It's common to see price have a small or a slow retracement back up to the moving averages, whether it be the 10 or the 20, and then kind of fall back lower, holding the previous low. The higher up in the range, the better. Let's say maybe around here. And then you reverse, and then you attempt to break higher. And it's at that reversal that you start to see added buyer confidence, and that's where the volume starts to really come in. So tomorrow we have the FOMC. It's going to add a whole lot of volatility to the markets, and we could have a initial thrust up, and that's where we get rejected. Or you never know, we could just have a powerful move to the upside if there's a significant shift in the tone of Powell. We'll have to see. However, I would not be surprised to see some sort of rejection at the 10 or 20, followed by a retracement to the downside, and then a bounce attempt to break higher, where we'll then get what's referred to as the follow-through day, which would signify the start of a fresh rally. We could also just consolidate here for another 2 to 3 days, probably another week or so, and then break lower. That's not out of the cards either, but I do want to kind of zoom out real quick and just take a look at where we're at. So if we look at the weekly chart here, you could see that let's go to this. You can see that this is where we had a very nice base that took quite a bit of time to develop, almost a year, that we broke out of. We're now retesting that former resistance, now support. Okay, and what we're doing is we're just consolidating, and that's exactly what the market does. You kind of want to look at it like a frog jumping from lily pad to lily pad. You consolidate, the frog jumps, the lily pad grows, forms, the frog jumps to the next. The lily pad I don't know what it's jumping to, if the lily pad is just growing, but you know what I'm saying here. You're just jumping from consolidation level to consolidation level to consolidation level, and so on. So with that concept understood, what we're expecting now is for this consolidation to continue for a couple of days. You don't always get an extended consolidation. Perhaps we may move higher, and then that consolidation area will grow a little more. Sometimes you just have a strong bounce and move right back up to the upside. But generally speaking, the buyers and sellers will take at least a week or two, fall into equilibrium, then that consolidation will resolve itself in either or direction. The key is to trade between the consolidations. You want to go when the frog is jumping to the next lily pad. That's where the momentum is. That's where the easy money, if you will, is at. Here you get chopped up. It's a hard penny environment. If you just develop the patience, which is the hard part, but once you understand this concept, it's not so hard because you understand bigger picture what's going on, and you trade those consolidation breakouts, the strongest names, or even just the S&P 500, the QQQ, at the time of that breakout, that's where you'll make quick money. You could not trade for 2 weeks prior. Trade that breakout. You'll make more money here than most people that traded within this range. In fact, the majority of the people that trade in this range got chopped up, took huge losses, and are now mentally depleted and not even ready mentally for the next opportunity in the form of a breakout. So wait for this consolidation to form and then look for the breakout. If this pans out, we have a move higher or just pull back tomorrow and then breakout higher. We would also have a double bottom neckline breakout, and then we would pair that with this the 10 moving average and the 20. We would then be reclaiming the short-term moving averages, giving us a strong attempt to push up to the 50-day moving average as the next target. So to conclude with S&P 500, we have major catalyst tomorrow. It's likely to add a lot of volatility. The FOMC is usually going to cause major movements to both sides. It's kind of like throughout the event between 2 and 4 East Coast time, the markets kind of look like a barcode. There's just no direction. Overnight, the markets digest it, and usually Thursday is the day where the market will pick a true direction, and that's the one you want to kind of lean on. So with that said, we're just gonna wait and see how this forms in the next day or two. There's really no edge in going either or direction. I've taken 2 trades the last 2 days. I've gotten out of both of them break even because I'm not going to take a position into an event that could act as strong as a catalyst as the FOMC with no cushion. Just doesn't make sense, right? So that's the S&P 500. The QQQ is actually a little weaker than the S&P 500 for once. It's also has the same pattern. Wait, is it? No, it's not. It's still stronger. I made that decision was this bottomed out on the 27th. The QQQ bottomed out on the 26th. So it's a little stronger because it bottomed out a little earlier. But QQQ is moving up on, once again, a dry up in volume relative to the initial move down. We're waiting for the same exact thing to play out for the QQQ. Let this consolidation range play out. If we do have a very powerful move tomorrow through the short-term moving averages and it's on heavy volume, then I would look to go long. However, I have a hard time believing that's going to be the case, but I can't predict anything. We're just going to have to wait and see. So S&P, QQQ, same dealio. IWM in that consolidation range already. Just got to let it play out. Once again, I'm not just saying that once we consolidate, we're going to break out higher. We could very well consolidate and break out lower, but the market is extremely oversold from a more intermediate to long-term standpoint, even short-term. So I just am leaning into the likelihood that we break to the upside. If we take a look at the weekly chart for IWM, you could see resistance turns to support. Where are we right now? We're at that support level. So we bounced once, twice already. You can see when you pull into a resistance level, a support level, or what are you to expect as a trader? You're going to get some sort of consolidation, and then once that consolidation resolves, that's where you get active. You come into a resistance level, form a resistance level. What do you expect? Some sort of consolidation. Once you resolve, you get active. Consolidation moves higher, comes lower, you get the deal. So where is this consolidation going to resolve? I don't know. We're going to have to see. But looking at the market internals, and as I discussed over the weekend, how pessimistic the overall market is. The market internals are very oversold. They're all at the extremes. Upside seems favorable. However, if we are in a fresh bear market, market internals can stay in the extremes for an extended period of time. Powell's going to make that decision for us. Let's take a look at my watch list now. So let's start with LVS. So LVS, I like this chart a lot. It's been holding up well relative to the rest of the market the last couple of weeks. You can see we already broke out of that consolidation period, right? So we are out of this chop. We now are trying to flip the former resistance to support, and we're moving in this tight range. The only problem right now is that the 50 moving average is just overhead and it's still sloping down. We want that to at least be flat at the time that we break out. If it breaks out while it's still sloping, which, I mean, it won't be, it will be flat. And this is just me putting in a little curve here, kind of predicting how it's going to unfold in the coming weeks with regards to the angle. But if we do break above it tomorrow, it's still a potential buy. I think I'll still definitely entertain it. It will just come down to the volume. But obviously the market was getting beat up pretty bad over the last 2 weeks, and this has actually managed to move its way up. So love this name right now. Caesars Resorts reported after hours today. I haven't looked at it yet, but if it did have a strong reaction to that earnings call, then that could cause a sympathy move in LVS and be what it needs to break out of this, break above this 50-day moving average. Do note how we got rejected off of this gap resistance earlier last week. And once you fill the gap, you can kind of dismiss it as resistance. It's basically been filled, and that supply has been met. Now, if you look to push that same level again, it's not going to act as a resistance, or at least not near as significant as before it was filled. 48.30 is the entry point with targets 49.3 and 50.05. And I'm doing, all December 15 contracts right now. And generally what I'll do is with the group, we'll trim at 15% profit and then again at 25. It depends. If this is the start of a fresh move, I might give it more wiggle room. Here's MPC. This is an energy stock, and I'm going to tell you right off the bat, if you don't have a strong stomach for volatility, energy names are not going to be your thing. Don't even bother. Don't entertain it. It's fine. Just move on to the next trading opportunity. If you do trade stocks you're uncomfortable trading with, you're more likely to make emotional trading decisions, and that's going to lose you money down the line. So NPC today had earnings. It managed to close up about 3% with decent volume, right below a trend line. Well, kind of forming the trend line at least today. If we did break higher above this trend line, it would be a 3 trend line break, and that's a buy signal. It's what's referred to as a shaper pattern, and shaper patterns are basically formed throughout a stock's correction. So every time a stock has a powerful move up, it will then eventually correct, and then through that correction, it will create shaper patterns that you can then play. And once that shaper pattern breaks out, which it would be right here, this also looks like a inverse head and shoulders, but it's a 3-touch trend line breakout. You can look to go long. I'm going to wait till 154.40 before considering to go long, but aggressive traders could go as early as tomorrow, right over today's high. However, do be mindful you're going into FOMC at 2 o'clock. So if you're an aggressive trader, go light, and I would highly advise against holding a position through the FOMC if you don't have significant cushion by that point in time, which you could definitely accumulate within open and 2 o'clock during the trading day. So just food for thought there. If we do take a look at the weekly chart, you could see we were in a base for about 2 years, and then we had a very explosive breakout. Now we're kind of just retesting that support or that resistance, flipping it to support, and it looks like we might be attempting to go higher. Compare this to the sector at which it is involved with, which is energy, and it's a completely different picture. It just shows how powerful MPC is right now versus the rest of the sector. If we go to daily, we can look here. We could see that XLE has had this very steep sell-off and is now below the 50, 20, 10, and sitting just above the 10. Compare that to MPC. MPC is now above all the moving averages, however, in more of a neutral position. But obviously, just looking at the trajectory of this sell-off, it was nothing near what the XLE was, which is a basket of energy stocks, which MPC is involved with. So my point here is the stock is showing relative strength. When a stock is showing relative strength, it's not only good because it's likely to appreciate more if the sector does end up reversing, but if that sector sells off, stocks that are showing relative weakness are likely to sell off the most. Stocks that were showing relative strength like MPC would likely sell, but not near as much as the rest of the index. So it's a win-win. MPC is similar to AR. They're both resource stocks. So they're both energy names that are volatile. You could just look at the chart, kind of looks like a barcode. So once again, if you can't stomach it, just dismiss it. The next one we look at is a tech stock, and it's the one that is basically my highlight setup for tomorrow. AR, I forgot to put the price targets, but if we just look at the stage analysis, we can see that we are basically at a major level here, right? So this was former support, and then turn into resistance for the stock. If we break higher here, you can see that this 30 moving average is sloping higher, which would give us a stage 2 breakout attempt. So generally, stage 2 breakout attempts, you're going to need to see a lot of volume. So I want to see a lot of volume. With that said, if we do break above 30.20 to show me that there's actually some buyer interest, that there's conviction behind the move. I do like how we have this big green bar and we're staying within the range of that bar, almost above the halfway mark of it, which is nice to see. If we break above 30.20 on heavy volume, preferably after the FOMC has passed, I'll look to get involved. Now, my favorite setup for tomorrow is IBM. So we have a gap down, and then we have a gap up. So this is what's referred to as an island bottom. It's generally what you see. It's a major bottoming pattern, and I just love how we've not even came back down into that gap area, and we actually moved up today on heavier volume. We're about to clear the prior high, giving us a higher high. So this is one of those names where, because of the setup, because of the volume pattern, very strong green candlestick here, overwhelming all of the recent volume candles. It's one of those stocks that I'm willing to take that chance of buying ahead of FOMC. So 50-day moving average is flat. That's what we like to see. It's in a neutral position. If we could break higher tomorrow, there's a good opportunity that this is a name that's going to lead the market, because you want to take into account that this stock is above all the moving averages right now, where if you look at the QQQ, it's below all the short and intermediate term moving averages. So it's clearly showing a lot of strength versus the index, and that's where we want to get involved. So IBM, all of these different names are going to be December 15 contracts, and likely going to be, I think IBM is a 130 strike I'll go with. Can't recall the rest of them, but definitely at least a month and a half out is what I prefer. I hope you guys enjoyed these lists. If you have any questions, as always, feel free to reach out.